Now let's look at the second, sort of strategy for the day, which is a profile strategy, which is a bit of a consolidation type breakout. So I just want to quickly go back to that. It's called a consolidation breakout, and I'm going to show you what it looks like on the gold. Okay, again, this is from the gold on the 6th of November, which is today, and I want to show you what this looks like on a profile. Okay, so what you've got here, I'm just going to suck this in a little bit. This is the impulse day. Okay, so this is obviously what we're talking about from last week. Thursday, that really big update. It's the impulse move. We then get the inside consolidation, which is very, very, a very common thing that occurs after an impulse day. We then get a second day of consolidation. And we know it's consolidation. Why? Just look at the amount of overlap between the value areas. Okay, almost an exact volume point of control. So the market says we are happy facilitating trade at this point, and we're not going to budge. All of a sudden, day 3 comes. Okay, market accepts trade below that VPOC, but then all of a sudden the consolidation snaps and it breaks. And those buyers now say it's time to get a move on. It's time to start facilitating trade higher. And that's what we've seen now in the start of today's session. Is we've seen that breakaway, that move away from that acceptable value, and we're now starting to accept value outside of that 2-day consolidation. Now, when we see the break of this pattern, i.e. 1, 2, 3 consecutive lows, when we see the break of that consecutive lows, what we're looking for in profile terms is we're looking for trade to not just facilitate higher, but more importantly, test higher. Okay, remember, we are going with the trend here, so we're looking for a little bit of momentum at a minimum to test last week's high at 1239.3, but also potentially extend upon it. And that's the play we're looking for. Right now we can see for the last almost 3 hours the market's just sat up here, consolidating, biding its time. But the principle, and this is what I said to you in the beginning, the principle and the conclusion we make is that we have broken this consolidation now. We've broken this 2 days of value. Therefore, prices should begin to explore higher. It doesn't mean it's going to do it in a trend. It doesn't mean it's going to do it in a straight line. It doesn't mean it's going to do it straight away. But we should start to see prices just constantly moving up and up the page. Now, our caveat, our sort of line in the sand, as they say, is very much this 1235 area. Why? Because we saw the cash open, we saw the aggressive nature of the gold. Very aggressive. Bang, cash markets open in Europe, and straight away gold went bid up from 1232s up to 1236s. It then pulled back and it found those buys at 1235s, but also left a single print there. Okay. Now that single print, if you do a lot of profiling, you've taken the profiling course, you'll learn single prints are very often a very good indication as to the strength of either the buyers or sellers. And in this instance, the single print is telling us that the buying nature off of those 1235s was very aggressive. Okay, we can also see the tail on that R print or that R TPO was also quite high. So in other words, the market came to those 1235s, but just as quickly as it came down, it got bought back up. So that's our line in the sand. Below 1235s, we should auction very quickly and even take out today's current low. But so long as we remain above those 1235s, the probability of a test at 1239s is extremely high. Okay, and that's our profiling play then for today. So we're looking for long stop below 35. Again, current prices, you're looking at a $2 stop, and you're looking for at least a break of those 39. So you've got a good $2.5, $3 upside against a $2 stop. Alright guys, that's then our 2 strategies for today. What I'm going to finish off with is just very briefly, just reinforcing what we've learned today. First and foremost is that absorption tends to be sideways in nature, with auctioning then the result of that auction. Okay, they go hand in glove. Right? You cannot have absorption and then no auctioning. Okay, it's the auctioning that confirms this absorption. That's the real key. When you see that absorption, be ready for that auctioning process. If you don't like the concept of it, make sure you learn this concept of absorption and process and auctioning, because it'll help you avoid selling this when it does start to auction in a straight line. Second is obviously our little break of our consolidation day. We can see gold's taken out that consolidation to the upside, and the probabilities now is for a test of the previous week's high. Alright guys, that's then a wrap. I'm just going to finish with obviously the usual quote. As I do say every week, if you've got a question, reach out on Twitter, reach out on email. I'll happily answer those questions for you in the stream. Okay, that's my email address, so feel free to reach out. And just remember, the successful person is the individual who forms the habit of doing what the failing person doesn't like to do. Okay, it's not always fun looking at the charts. It's not always fun analyzing numbers. It's not always fun staring at a screen to, make zero on the day. It isn't fun. Okay, but it's that process that we consistently do that ultimately gets us to the results we ultimately want.